So, Pamela, Stephan, welcome to BSCA, Big Impact Chat. This one is some kind of a little strange, little particular, because first one, we guest audience. And I mean, I'll let also Bob introduce himself, who he is, what we're doing, if he wants to spread some words before we start the meeting. Bob.
No, I would like to welcome everybody. You're interested, you're present basically because you're interested somehow in supply chains, new technology, and digital transformation. And this is a forum, a way of sharing knowledge where we invite a huge amount of people with different types of interest as well as know-how to actually share the information to understand what is possible and mainly also with the help of blockchain technology. So yeah, in this case, Pamela and Stephan are the ones who are helping us to actually spread the word and also share with their insights and knowledge and the great work they're doing.
And there is another friend of ours, by the way, which lives close to you, Bob. We have Chris Sinderman from Sweden. So welcome, Chris. He's a good friend of mine. Invite you to spread your own insight as a business innovator. Pamela, leave the stage to you and Stephan to kick off the meeting, please.
Hi, everyone. So I'm Pamela Marr. I'm working for the Digital Standards Initiative. I'm based in Singapore, and really delighted to be here today to talk about technologies for the future supply chain ecosystem. And this is a digital supply chain ecosystem, which is something that is DSI's objective. Hopefully DSI will not be totally unheard of to you. But we're going to run through a bit of a primer on Digital Standards Initiative. But before I start, I'd like to introduce my co-speaker and close collaborator, Stephan Wolf, who runs the Global Legal Entity Identifier Foundation. So Stephan is based in Frankfurt. So you can say hi.
Pamela, thank you, Pamela, and welcome from me as well. I'm looking forward to this session.
Yeah, and thanks, Andrea and Bob, for arranging this. Okay, so what we're going to do is just give you some background, talk about our approach to how we digitalize trade, and then go into discussing what we're calling the trust supply chain with some of the principles. And we'd really like to hear your feedback and hear your questions about, whether you believe the trust supply chain is even possible or practicable in this world. Okay, so basically, why are we talking about digital trade? And the premise is basically that, all the technologies are here to digitalize global trade, but our progress is very, very slow. It's still really paper-based, as any of you who work in trade or trade finance will know. And there's so many problems with paper-based trade that we are looking to basically increase efficiency, security, anti-fraud, lower cost, increase speed, and so forth. So basically, the Digital Standards Initiative was founded by ICC with the support of Asian Development Bank and the Singapore government and the WTO and World Customs Organization to digitalize global trade by promoting policy reform and harmonizing and driving the adoption of digital trade standards and technologies for the benefits of business, governments, and people. So our approach focuses on key trade documents, which have been identified by the WTO, UNSCAP, and UN Citral as the key documents which basically allow global trade and supply chains to take place. So just going, we've been, DSI was created in 2020, and we've been engaged in the task of digitalizing key trade documents for about the past year and a half. And the main group that we use is called the Industry Advisory Board. So the IAB was set up, basically, DSI is a public kind of entity funded by the public sector and the private sector, but basically our aim is to actually drive change in the private sector. And so we set up the IAB in order to gather the private sector's views and consensus on the approach that should be taken. So as I mentioned, our key means of working, we have two working groups. One is the Key Trade Documents and Data Elements Working Group, and the other is the Trusted Technology Environment Working Group. And Stephan chairs the TTE, and the Key Trade Documents and Data Elements Working Group is basically chaired by GS1. So last March, actually March this year, we published our first kind of recommendations on digital standards. And it's called, it's basically, recommendations on how do you digitalize 7 key trade documents. And what we did is we didn't create any new standard. What we did is actually just boil down each of the key trade documents into consensus data set. And then for every data element, so, if a data set if a key trade document contains, say, 20 core data points, we identified which of these 20 has data elements that must be shared across the supply chain, given that on every supply chain, a number of data will actually be repeated as the product moves down the chain from raw material all the way to the store and the consumer. And so at each of these stages, a certain core group of data will actually be repeated and needs to be shared interoperably. And for each of these shared data elements, we identified what is the global standard to which this data element should adhere, meaning that if there is a global standard that the data element adheres to, then it can easily be plugged and played across trade platforms and networks and from player to player. So what you see here on the screen is this is the spaghetti bowl. This is basically a map of shared data elements. Okay, and in the first report that we published, this is in basically PDF form, we're working on creating an interactive map of this. So this is actually, if you take all of the shared data elements across key trade documents, that is actually your single source of truth, okay? Because every data element can be sourced to a trusted, generator of that data element. It should be verifiable. And as it travels down the chain, the supply chain, it should be able to be protected and trusted in its original form. So, and this is sort of what it looks like. It's the definition of the document, the standard to which it should adhere, and any key references. And a lot of the key references come from ISO or IEC or organizations like SWIFT. So we're in the process of actually digitalizing all the there are about 40 key trade documents that were identified in the cross-border paperless trade toolkit. And the batch 2, which is ongoing right now, should be completed in September, and then hopefully by the end of the year we'll have gotten through all 40. So basically what you're going to have is actually a huge collection of supply chain data that basically can be plugged and played across trade platforms and across supply chain management platforms. So then that raises the question, how do you actually protect these data elements as they got generated? How do you trust that they're true? And how do you make sure that they're not altered? Like no one cuts and pastes the wrong data. But how do you, what is the technology that you use to ensure the transitability of these trusted data elements in a way that is actually verifiable? Let me go back before I pass it on to Stephan. We're already working on actually implementing the data, the key trade documents data standard. And this is an initiative around EBLs. So EBL is one of the earliest digitalized trade documents. You will recognize the logos of the organizations here. BIMCO, FIATA, and DCSA are the leading shipping and container organizations globally. And basically they have established a way to interoperate their respective versions of the bill of lading. In fact, they were key to creating the e-bill of lading standard that was just published by DSI. And so they're on the verge, actually, through the Future International Trade Alliance, which is called the FIT Alliance, and ICC is a part of that. We helped to found it. We're on the verge of making a declaration which will invite everyone in industry to basically commit to using EBLs. And given that EBL is actually a central kind of supply chain document, we think that actually this is not just applying to shippers. Okay, this is because EBL is so central, it actually contains data generated from a number of sources, some of them which are actually 1 or 2 steps removed from the shippers. And so it allows anyone participating on a supply chain who uses any part of the data in an EBL to actually commit to use, adhere to global standard, interoperate data from the EBL, and thus drive adoption. And then you can see some of the great benefits in terms of dollars and trees we can save. So here I'd like to actually pass it on to Stephan to describe to you how, in the movement to, interoperate the supply chain using data instead of documents, how do we protect the data? What is the technology architecture? So over to you, Stephan.
Initiative gave us the opportunity to look holistically into all aspects of trade. You've heard just about the 40 document types and the whole data layer, but we looked, what are the core constituencies of trade today? So we have on the top layer, we have the physical flow of goods and services. That is the real world, the reflection of what's going on. And usually you have a reverse payment flow. And then there are other financial intersections like trade finance and factoring and things like that. But basically, you ship your goods and you want to receive your money. Today's world is heavily based on paper. Even though people talk about digital a lot, let me just restate why paper has an advantage. And then we can look how we can overcome this. Paper has one advantage, and that is it is interoperable. So people can exchange paper. Yes, they have a lot to do in manual work and retyping and stuff like that. But basically, all participants in the global trade chain can exchange documents that are on paper, can interpret them, can store the content, can copy the paper if necessary, put stamps on it, and so on and so forth. So paper is by far the most interoperable medium that we have at the moment. However, it is error-prone, expensive, and comes up with a lot of other issues. So we want to replace paper with computer-to-computer exchange of information, digital information. And that is the third layer, the information layer. But now when you talk about computer-to-computer communication, we're not talking about one big platform that knows everybody in the world, where you put your information, everything else. You actually talk about a lot of peer-to-peer transactions among participants in the market, including regulators and others. And so it's a huge network of participants, and they all exchange information via APIs, via files, via messages, and so forth. And in order to protect this, the good old style of ring fencing your network, building firewalls, IP restrictions, and all of that is not good enough anymore. And we've seen lots of examples where people hacked into systems, falsified information, and made money on that. So we need to protect the data itself. I think that's the core finding of our work. We need to protect the data itself. It should be digitally sealed, or as we call it, signed. And we want to replace trust into intermediaries with verifiability of the result. So that means if you ship a piece of information, a data container, as we call it, from the sender to the receiver over multiple hops, you do not have to trust the hops because you can always verify the authenticity of the sender of the information, and second, that the information has not been tampered with. And that is what we call zero trust architecture. And zero trust architecture, the verifiability of everything, requires that we look at data and the signing of data in a different way. And that is basically the finding of our work group. Now, Glyve, my organization, is in the mix because in order to sign something, you need identity, and we call it organizational identity. When companies exchange information, they usually do this via their proxies, via their employees, and so on and so forth. And they all have roles, authorities, and so on and so forth. So we need an organizational identity framework that can handle delegation of authority to individuals. That could be official roles like CEO, CFO, chair of a board, but could also be functional roles like a trader or filer or whatever. And this is where we come in. We provide an identity standard for that. So zero trust architecture plus identity plus standards will make the data interoperable. And that is what we're proposing with this. So Pamela, back to you. Here. Okay, that is one level deeper into what I just said. Now we're talking about subjects and objects. And when you look at subjects, then we usually deal with either legal entity or natural persons. And when we talk about objects, it could be anything. It could be an immaterial object, could be a document, could be anything. And what you can see here is from left to right, you have from the exporting side, a logistic provider, for instance, a seller on the seller's bank. And then you have natural people who have the authority to deal on behalf of these organizations, and they exchange information, in this case, an bill of lading. On the right side, you have the same. You have the receiving end buyer, operators and stuff like that. And they also have delegated authority to individuals who receive the data and sign off on that data. And by doing so, we would like to introduce the concept of verifiable bill of lading, or VEBL, you could say, where we say that the bill of lading itself should be a document that is cryptographically signed and sealed so that verification can take place end to end. This is the next level deeper, if you like, of the slide before on how we envision the world. Now, there are multiple ways of building this, and we looked into the various, key technologies. We need public private key infrastructures for the key management. We need the exchange of data, the signing capabilities, and so on and so forth. And we're basically on the technology side, refer to two major standard groups. One is the existing standards around digital certificates that can be used for this. Basically, each national identification scheme is based on X509 certificates that can be used to sign or even encrypt information. But the new kid around the block, the new at the horizon, is the verifiable credential space. There's a new standard coming out from the W3O. It's pretty much driven by the internet industry, which will make information verifiable end to end. So we're proposing to use either one of them. We're technology agnostic, but you should either work with verifiable credentials and DITs and whatever you have in mind, or you should work with digital certificate infrastructure so they're already in place.
Okay, thank you, Stephan. And basically the reason that the reason that we're so interested in proposing this ecosystem architecture is because in the present, in the present world, there are networks which are totally secure, but as Stephan said, it's actually based on trusted intermediaries. So once you enter the network, you can be trusted, and then as an entity, except that the data cannot necessarily leave that network. And so you end up with a lot of trusted networks, but all of them are so-called digital islands. And the way we envision is that an organization needn't be beholden to a given network, but rather can move their data across networks and plug and play those truly, because the data will be verifiable and secure in the ways that Stephan described. And, you know, for big organizations, actually, they can have multiple networks. In fact, that's how the world works. But the ability to move across trade networks is actually the key to unlocking trade for SMEs, because the complexity that it's required to actually run trade networks, if you actually have to be member of multiple trade networks, first, the data may not be the same, you know, the data standard may not be the same, how the network operates isn't the same. And for an SME, this is basically impossible complexity to navigate. So we see a world where everyone can choose what data platform you can use, but we're requiring adherence to two things. One is that you use interoperable data standards for data that must be shared across the network. And two, that every entity which wants to play in the world of digital trade should verify and protect and build the systems required in order to basically make them a trusted handler of data and trusted generator of data. So it's a much, it's actually an open and a more open and yet more secure world. So that's, I think that's basically it. So what we're doing, the reason why we're here is that we're actually in box 2, if reading from the left. So we've developed this concept working through the Industry Advisory Board, and now through DSI, we're actually trying to go out and talk to both industry as well as technologists, as well as policymakers to basically get feedback on this vision. We'll turn that around into a revised concept, and then we'll plug it into DSI certification, which we are developing kind of alongside this. And the certification will hopefully be something that has market currency, basically to drive adoption of digital trade. And it will enable any supplier or trade participant to raise their hand and say, I am digital supply chain capable, meaning that the data I generate into the supply chain is of global standards and can be verified and is secure, and any data that I handle adheres to those same principles. So, and then that's a commercialization process. So I think that's pretty much it. Maybe if we can just open it up to comments, questions, like do you agree, disagree?
And thanks, Pamela, by the way, and thanks, Stephan. I do invite attendees to their own questions. Really, I would love this to be highly interactive conversation. This is what also Pamela wished for before going to the meeting. So don't hesitate to make questions. And I'll leave it on to the attendants to take the word. Don't be shy. There's no reason for being so. So
yeah, and I also like to introduce Hans Huber,
who please.
has long been in the trade and finance technology space. Hans was really critical to helping put together this vision. So glad to see you here, Hans.
Welcome, Hans, by the way.
Yeah,
Thank you.
great. I'm
You're
sure
welcome,
many people
Hans.
know him on this call. So actually, you know, if nobody has an initial question, because it's always very difficult to get the first person to ask a question, maybe we can invite someone to actually give their feedback on it, and we
Well,
can
actually,
start.
actually, the first one comes from Australia, and she's a good friend
Oh,
of
great.
mine,
Okay.
Anna Jones. Anna,
Okay.
Hi,
welcome.
how are you both? I hope you can hear me properly because I'm talking through my computer
Very
at the
well.
moment.
We can
Okay,
hear you perfectly, Anna.
that's excellent news. Well, the first thing is that I'd be very, very interested to know, and it's very, very challenging when you're looking to digitize trade and get verifiable sources and not try to, if you will, put favor of two particular partners. But we find that SAP has 77% of global trade touches SAP. And SAP, as you would know, is integrated with a lot of other partners, particularly procure to pay partners. So to what extent do you think you can actually work with the procure to pay platforms and the ERP systems to be able to help to integrate the networks that they're actually tapped into?
Maybe I can pick this up first, Pamela, and then you can add to this. You raise a very good point. Our concept is technology agnostic. We're not saying you have to choose this platform or that type of device. That is subject of decisions to be made in the private sector, in the software industry, and SAP, and Oracle, Salesforce, and others will play a major role in that. But these large platforms are often not in place with SMEs. They cannot afford them, they're too expensive. And that's another reason why they find it difficult to participate in digital trade flows, and why they still fall back on paper. So what we believe is that we should stop thinking about platforms and ERP vendoring tools and everything else. They will be around forever. This is not the issue, but we should rather think of a protocol layer that will allow the exchange of information. And this protocol should be open. This protocol should be free of charge, open source, everything, open standards, so that all people can participate. And then software vendors can build an application that uses this protocol. And if this sounds too abstract, then I would like to give you an analogy, and that is the internet itself. As you all know, when you type in the URL in the browser, then all of a sudden you get a page. So there is a communication between your computer, the browser, and the server. Now, all of the servers in the world are hosted differently, different technology, different companies doing different things, different API development, but it's all based on TCP/IP and HTTP and HTTPS open protocols that enable the exchange of information. And when you look back 20 years, none of this was there. Everything was based on leased lines and proprietary networks and things like that. That has changed completely. Everybody is now using open protocols. And we envision, so to say, a trust layer as an open protocol on top of the protocols that I just mentioned. And we see first developments, very promising developments, actually, that this is going to happen.
Stephan,
great
there is a
example.
question. Yeah, there is a question here in chat. It comes actually from an unknown person. What steps are the ICC taking about using international standards for product data linked to HS codes and then to the UN sustainability goals that in turn allows people to understand the nature of the transaction? That's a very good question, actually, because it links financial side and operativity in depth.
Yeah, I mean, okay, I don't know if there's any kind of universal ICC, initiative to basically digitize the product information layer. And the only thing I would add is that I know some, I know there are startups which are actually trying to do that because they believe that digitalizing product information is kind of the next big thing. But ICC is not doing that. We're not driving that. I would only suggest that actually any kind of product information that will need to be trusted actually needs to come from the same processes that are generating a lot of the information that goes into key trade documents. Okay, so if you think about product information, what's in the product, raw materials, even the number of products that goes into a container and so on, all of the technologies like sensors and RFID and smart cameras, which are generating, and temperature sensors and so on, which are generating this, which is actually the same infrastructure to generate all of the other data, including sustainability data. And the key, the key barrier today on why can't we trust sustainability data is actually because it can't be verified. It's just like Excel spreadsheeted. And so it's not actually linked back to any kind of real-time visible hardware. And so, we are basically working on the infrastructure to actually generate trusted data about the supply chain, no matter where it sits along the key trade document chain. And I guess that once we get done with digitalizing the business processes and the information going into those business processes, we have two tasks. One, fix finance. Two, fix sustainability, both in the supply chain. So that's kind of all I would say.
I would like to add.
Yeah.
I would like
to, Stephan, sorry.
I would like to add that ESG is both. It's an opportunity, but it's also something that comes over us through regulation. So I think we should take digitalization also as something in order to respond to regulatory requirements and things like that. And ESG is a very good example. Sustainability questions are by nature global, right? Your customer might be local, but sourcing, products and sourcing pre-products is usually something that you do globally. And in order to understand your supply chain, identity is absolutely key. And the verification of the identity, in my opinion, the authenticity is even more important. And this is why ESG plays perfectly into what we just said. Both we can, support ESG reporting, and as Pamela has described it, but secondly, we can also use the technology to respond to regulatory requirements.
Thank you, Stephan. There is another question that is somehow linked to the previous one, and it comes from Ariel Müller. He is asking, can you speak a bit to how this might contribute to more resilient supply chains in the context of increasing impacts from climate change? Curious if this is the gateway to more resilient, distributed, and just supply networks. Follow-up question, what would be counterpoint to my assumption above?
Yeah,
Who wants to
I'll
take
that. Yeah, I'll take that. And
you go first,
hi,
Pamela.
Yeah. Hi, Ariel. It's great to see you here. So, I mean, the key, at least from my own background in supply chain, the key issue on why aren't supply chains sustainable today and why aren't they just is that actually the resources have been concentrated basically at the downstream point. So the profits are not equally distributed. And so when it comes time to invest, especially at the upstream, which is where the majority of sustainability impacts take place, everyone says, well, my margins are too thin, I have no money. By the way, I also can't get access to finance and trade finance, most of all. So what we're proposing, digitalization is basically the route to creating efficiency, transparency, and also, cost savings along the supply chain, which can then be plowed back into sustainability initiative. So one, there's the infrastructure. There's the digital infrastructure all along the chain, which is basically an infrastructure for traceability. And then there's the efficiency of digitalization, which basically more fairly shares the resources along the chain. And both of those are what's required in order to drive a better distribution of resources and to create the funds in order to make better decision, the funds to actually make the supply chain more sustainable. I would also add that a key problem of why are margins so thin on the supply chain is actually just poor business planning because of a lack of visibility. So that's why supply chains are not resilient, because decisions have been made very far from the point, of consumption. And so they got the wrong product, wrong time, wrong place, wrong price point. And so by creating a better digital infrastructure inside the supply chain, you will actually have more information to actually make better decisions. So what we're talking about is like this glass pipeline, where you can actually look down the chain and actually see where all the products are at any given time. So even though we're not actually creating a product taxonomy or a product database, we are actually creating the infrastructure, the digital infrastructure, to actually make a lot better product decisions. And I think, historically, if you look at, where has investment gone, it's always gone into creating a better product and to suppressing cost along the upstream. And here's the perfect opportunity to actually recoup some of those and begin to invest more wisely. At the same time, I would say that actually, suppliers upstream need help in order to be able to invest. And so the primary help that they need is actually access to finance. Digitalizing trade is the single biggest thing that we can do to free up trade finance and to begin to close the trade finance gap. Because why don't banks lend to SMEs? Is because the product process is too costly. Securing who is the SME, what is their credit record, what is their trading record, are they a good credit risk? How do I get the funds down and secure and verify what's actually going on in the transaction? All of this, the banks have to create a separate infrastructure in order to verify all this data. And basically what we're doing in digital trade is to actually create the single source of truth. So if we can actually create that single data set, which is verified, trusted, authenticated, we can actually hand that to the banks and reduce their cost to serve massively. So, I mean, and that's actually something we are working with the ICC Banking Commission on proving. It's because we're taking, what do banks need in terms of data in order to process a trade finance transaction? And like, if we could actually fulfill a large part of that needed data set using this, secure, trusted, verified information, that actually reduces the cost to actually generate trade finance. And that will free up financing, not to mention provide better data about like what's actually going on in the supply chain. And with digital identity, create a paper trail, a data trail about SMEs, which would allow them to get through the know your customer and anti-money laundering process a lot cheaper than is currently possible. So sorry, very long answer, but anyways.
An exhaustive one, actually, Pamela. There is a question on my friend from Istanbul, Ayhan Bey, He's asking, what would you say something is clear about the role of SWIFT at FIT in the short and mid-term?
But sorry, I'm trying to look for that question.
Yeah, it's just right after the reason standardized 8,000. Maybe Ayhan, if you want to speak directly to Pamela, you can take the stage.
Hello, can you hear me, Andrea?
Loud and clear,
Yeah.
my friend.
All right, merhaba, Andrea. And my question is clear indeed. I would like to learn what the idea Pamela and Stephan will say regarding the role of the SWIFT in the FIT organization. That's the SWIFT's roles is really crucial when I look at the banking industry. That's why I'm very curious to learn the role of the SWIFT in the trade digitalizations. Thank you.
SWIFT has been a supporter of the ICC DSI from the very beginning. The e-bill of lading is a key document which will trigger a number of payments. And so, I guess I think SWIFT actually provides a number of standards for the key trade documents exercise. And I think they are a key player in the world of payments. And so I think their role as, representing the financial angle in the FIT Alliance is actually really essential, as it is, in the entire digital trade ecosystem. And to the extent that we can actually partner with SWIFT in order to free up some of that trade finance and to close the gap, that's something we're working hard on, and it won't happen without, further digitalization of trade.
And I would like to add to that, the SWIFT question is a very good one. SWIFT knows on their network the financial intermediaries very well. We have a big code, which is the routing key on the SWIFT network in order to wire money from left to right. But SWIFT does not know the counterparties, the payer and the payee. That information today is encoded in strings, meaning, you type in the name of a company, name of a person, an address, and you're good. And as you know, matching this data in your databases is anything but easy and very costly and time consuming. We at Clive work together with SWIFT on a big to LEI mapping. And from that, we know that we have roughly 2,000 large corporates with a big code. And that means the whole field of SMEs is untouched by that. So there's a lot to catch up. And SWIFT will certainly play a dominant role, or a prominent role in the payments and KYC space for banks, absolutely. But I would also like to highlight that we see now more and more payment systems that sit a little bit aside, instant payment systems. We have seen this in India, in Singapore, in other Asian countries, in South America. So the future of payment is also more diverse. So that's a very interesting spot to watch.
Thanks so
Thank you,
much.
Stephan. Thank you, Ehan, for this question. I would like to go to the next one, which is also very insightful. It comes from Mr. Michael Palage, who's asking, does the SEC have any update on the status of UK electronic trade document bill? Given that a large portion of international shipping is based on UK law, how do you see the move towards electronic document being treated as the equivalent of paper documents ongoing about the changes that Stephan discussed in this presentation?
And Duan already provided the link to the bill. Thank you very much for that. I think we can all say that the UK made a big effort in making their law more digital, and this bill is the clear sign for that. So yes, we believe this could be the common ground for many contracts around the world in trade.
I would just add that I was actually meeting with the ICC UK team last week, and it seems that the bill may be signed by the King, I guess, and come into force. Well, it's signed by the King before summer ends, and then come into force 2 months later, so September, October. And that actually the next game is to really define what is a reliable entity for transacting the data. So there is a provision in the bill which requires the use of reliable agent or entity in order to handle the data. And so the question is, how do you define this? What are the standards? And is there going to be like a registry of reliable entities in the UK? And, this is actually something which could provide a blueprint for how other countries deal with the issue too. And it is also overlapping with what we are trying to do with DSI certification, although the DSI certification goes a bit further. But this is going to be extremely interesting. I would also point out on MLETR that France also published the result of their consultation paper, or their the consultation paper by Paris Europlus last week. Alas, it's only in French, but maybe you can get ChatGPT to translate it. Basically, it gave really strong support for the local economic benefits of digitalizing trade finance. They put it in a very interesting term of the jobs and the amount of exports that is financed through France. And they said that, you know, in an era where there's increasing competition and where you know, the industry of trade finance is becoming less profitable, digitalization is basically one key tool to actually make it like to help the industry survive in France. So and the minister who received this and the minister who actually commissioned the report has already agreed that, you know, to put it forward. So, you know, Germany has basically almost fully aligned. UK is going to happen in the fall. Paris will, France is going to put it into, you know, its legislative calendar. So that's 5 out of the G7, right? And so, you know, for any country which is thinking, well, you know, is it kind of like going to happen? Well, when 5 of the G7 already do it, then the signs are pretty clear, given that the G7 accounts for over half of world trade. So, yeah.
There is an interesting information by Marta, by the way. Welcome, Marta, to this meeting. She's saying that today at ICC Spain, in 15 minutes, we have a meeting in order to create a similar report in Spain. So you see that movement is taking shape also in South Europe. By that way, I hope to witness the same thing here in Italy sooner or later. Bob, any thoughts from you so far as we are approaching the end of the meeting?
Yeah, I see one question by Thomas Frassard.
Thomas.
In terms of sufficient efforts made by finance. Actually, you know, I don't think we should necessarily be looking to the traditional way trade finance has been operated to meet the needs of SMEs. It's just like structurally, there's a mismatch, right? You have highly paid bankers trying to make a decision on $100,000 loan. It just doesn't work. So that's why digitalization is actually so necessary, because we're actually trying to create another model for how the system works. And so, you know, I you know, call me pessimistic, but I would look to digital platforms and digital finance in order to create solutions that are more adapted to SMEs. And I think digital identity is absolutely part of that. And actually, it's proven. If any of you want to see an example of that in work, go look at the Hong Kong commercial data interchange, which is exactly that. It's SMEs and a web of information about them, which is all digital and all approved and permission, that the SME can permission their bankers to go look at the information about them in a secure ecosystem. Now the CDI is actually put together by the Hong Kong Monetary Authority, so it's a bit different, but you know, it shows that the model of using better use of data in order to provide SME finance, and it's quicker, it's cheaper. So, I mean, for me, this is the way to go.
And we should not forget that the banks are also working on a completely different set of technologies around artificial intelligence. I mean, the whole screening of data, the whole assessment of data and things like that is going to radically change in the future. But all of this requires machine readable data in a good quality. So again, that's another reason why banks ultimately will support the digitalization of trade in order to streamline their own processes.
I would actually like to hear if anyone has feedback on the technology aspect. Like, do you agree? Do you think zero trust architecture makes sense? Like, have we answered all your questions about this?
Maybe I misunderstood, Pamela, but reading through your words, you see, it's just my thought. Maybe we're shifting towards a model from the past that was based in consortia towards a free, publicly available infrastructure. And that, in my opinion, is the winning way ahead, because of what we were talking about. SMEs, the bulk, the core, the backbone, call it how you want, is made by SMEs. So how before, could those small companies access technologies? It was nearly impossible. They couldn't afford. So now if you want to empower them, if you want to include them, it's worth, and that's the key movement, creating a publicly available infrastructure. So I like this trend, and I cherish this trend to be the move for the future. But again, that is my thought. Anybody else? I can see other comments, by the way.
Not an
Bob.
economist, but I have another thought.
Oh.
This is Anna.
Ciao,
Back here
Anna.
in Australia, I've done a lot of work with fintech in Australia, and the way that they actually look to credit assess, and the banks are actually trying to fastly iterate as much as they can, is they use data that is available and they try and authenticate it. And it's the premise of entities like Trade Ledger as well, who put a data-rich experience layer over core systems. So we do get by now with a range of data sets coming from a range of entities, particular to each jurisdiction as it stands now. But I'd love to learn more about having the regulatory defined data sets which can be trusted. I think that's very, very important because, for example, in credit rating of SMEs here in Australia and doing credit assessment, they use cloud accounting systems, they back trace us with BAS statements, which is tax statements, annual reviews for tax. They can look at transaction data as well if they get given access to the cloud accounting systems. They can get business registration data. They can get a whole range of data because of the technological advancement of Australia as a nation. And each nation has those different data sets, right? Where data can become freely available. So it's a matter of sort of, it does happen now. It just happens, I guess it's the whole purpose, interoperability, just sort of bringing it together into a central location of a common data set so that you can freely access that information in a reliable way globally to fully support ecosystem banking, I guess. I'm kind of coming on to your view, just discussing it myself. But the data sets already exist, I guess, is my point. But I'm now seeing that having that common global view of definition is important so that you can meld together the language of the various jurisdictional requirements.
Yeah, completely agree. For us, the global element, having something be globally interoperable is actually the key. And that, I guess the evidence number one is that, you know, in an ADB study, they actually studied how do SMEs trade? And it's actually documented that most SMEs, like 80–90%, actually don't trade internationally. And of those that do, maybe it's not as high as I think it was like 75% don't go international. Of the 25% that do, most of them only go to one country, you know, that they actually like Cambodia selling to Vietnam, but nothing further. And then you have to ask, like, why is that? Why is it so difficult for SMEs to actually trade to multiple countries? It can't be that their products are just not good. It's got to be something with how open are those countries, and so something with trade barriers, but also how easy it is to access the rules and the standards and the data which is required to actually pass borders. And the more we unify that, the more that, you know, our digital identity can be globally interoperable, the easier it will get. And that, I mean, that's the key. Everyone says, you know, SMEs provide 90% of the jobs and blah, 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 blah. I mean, and yet, you know, we have such difficulty trying to say, how do we get them money and how do we get them access? We know how. Digital is key to both of them. So yeah, and then the Australia example, it's great for this data ecosystem to be in Australia. Now you have to ask how much of it can be exported. So whenever you come to, you know, data packets, the question is it global standard? Can it be globally interoperable? And can I plug it and play it really elsewhere? Yeah. So I think we're almost out of time.
That was a great point, by the way. also from the point of view of unlocking value, unlocking financial side of things, and let micro companies also access and tap into their international trade. That's a winning move that all governments should be looking for. Again, Bob, any thoughts from you? Any thoughts
No,
from
no, I
Chris?
think the work that Pamela and Stephan are working on is great. It is really the thing which is lacking. There's already so much data. And as Stephan said, the interoperability currently is done by paper, which is not really the most efficient way of doing it. It's already in digital form, but we don't really share it with each other. And why is that? That's because there's a lack of trust. And in the end, a company is willing to share data, but they want to be in control. What they share and when they share, to who they share. So that trust layer can actually be a sufficient means for that. And then together with all of that, it really brings so much more effort and possibilities feasible to different companies. Now, supply chains are very linear and sequential. This gives the means to do much more parallel as well. It gives more insight, not only from a financial point of view or for the trade point of view, but also for logistics, etc. So you can be much more efficient with so many means with sharing this information. So this is a great work, and I hope we can actually meet this and make this achievable in a very short near future.
Another plaidoyer for the protocol part of our presentation. Thank you so much. Thank you so much for these great questions. I think Pamela, you and I were very happy with this result. You know, gives us another tailwind.
Okay, thank you. Thank you, everyone.
You're welcome, Stephan. Welcome, Pamela. Thanks for being with
Bye-bye.
us today and to the attendance as well.
Oh, by the way, if you want to learn more, you can actually go to our website and just sign up for our newsletter. Sorry, the advertising, but the website is
No.
dsiccwbo.org. Thank you.
You're welcome.
Yeah, take care.
Okay.
Goodbye.
Bye.
Take care.
Bye-bye.
Bye.